Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we will take you through how the markets shaped up in today's trading session and what are the cues to watch out for tomorrow's trading session. Well, as far as the frontline indices are concerned, Nifty ended the day above the 25,100 level. We cooled off from the day's highs, but nonetheless, we managed to sustain those 25,100 levels. We traded up 100 points, 0.4% gain coming on Nifty 50. Nifty Bank also in tandem, we cooled off from the day's highs, but nonetheless we traded with gains of 270 points. So 56,848 is when Nifty Bank shut shop. The broader market is where the action was, continuing to outperform the benchmark indices. Both mid-cap and small-cap traded with gains of over 1%. So largely it was the SMIDs that were giving the outperformance, and also as far as the banking names are concerned, a lot of financial and banking names were in focus. In fact, the entire PSU basket was buzzing away with gains of 1.5%. Bank of India, Maharashtra Bank, Indian Bank, IOB, they were all trading with gains of 2+%. Besides that, Nifty Energy was another sectoral gainer in trade that was trading with gains of over 1%. JP Power, MGL, ABB, NLC India, Siemens, they were all trading with gains of more than 2.5%. Besides that, there were a couple of other names that were in focus today. We had Rice that was in focus today on the back of an MOU that they signed. Glenmark Pharma on the back of a new launch that has been approved by Bruniska in India. On the back of that, Glenmark Pharma was in focus today. HPC on the back of capacity expansion. We also had Railtel Corp that was in focus on the back of big order win, and so was L&T that was in focus on the back of a big order win coming in. So largely it was a positive day coming in for the second consecutive session since the big bonanza coming in on Friday. Kanishka, so that's what I've got, but you tell us what are the other headlines that made news today?
That's right. Like action was buzzing in the broader market, as you mentioned. Now, MGL rallied on the back of strong volume growth, while Muthoot and Manappuram Finance surged on relaxed gold loan norms. Apart from that, microfinance stocks also lit up on easing asset criteria. Now, MCX shares, on the other hand, rallied a solid 7% after SEBI's green light for electricity derivatives. Also on the move was Subros that zoomed over 4% as AC cabins become mandatory in trucks. Now, on the other hand, Kalpataru projects that jumped over 3% on bagging orders worth more than 3,700 crore rupees. But with that, it's time now to welcome our guest, Lakshmikant Shukla, who's a technical analyst, institutional research at Yes Securities India. He's joining us now to help us decode the market trend going forward. Welcome to the show, Mr. Shukla. Now, let me start by asking you, it's the second day of gains coming in. So how significant is this 25,000 level on the Nifty from a technical perspective, and what are the next resistance and support levels that you're tracking?
Good afternoon to both of you. So, talking about the market, as we have seen a strong week, and Nifty bounced back significantly from key support levels, and that was all came with the positive response from the RBI Monetary Policy Committee, which fueled this rally, which also lead to an optimistic market sentiment that likely to extend into this coming week. Now, if we look at the structure of Nifty, so what we have found that today follow-up buying was missing, as market was muted and traded around with the narrow candlestick patterns of around 80-point range. But as upside structure remain intact because it has been forming higher tops and higher bottom for the last 4 days, and it has also given weekly close of the levels of 25,000, which could act as the immediate support, and which is again followed by the strong support from the 24,800 levels, where 20 DMA is also placed. So overall structure is looking on the bullish side till it hold above our mentioned support of 24,800. Now upcoming resistance is seen near the levels of 25,300, which is coincide with the 78.6 Fibonacci retracement coming from the lifetime high of 25,000 to 26,266 to 21,740 range. So I think that would be the upcoming hurdle for the Nifty. Once it taken out this level, then 25,500 to 25,800 would be the next level for our index. And if we talk about Bank Nifty, so same structure has been formed by Bank Nifty also. Here we have also seen a muted kind of action with the formation of narrow range candlestick patterns. But on Friday, this Bank Nifty index has given firm breakout above the previous swing high of 56,100, and then after it surged higher. Now we are expecting the target of 58,000 in Bank Nifty with the stop loss of 56,100, as it was the previous breakout. Now it could act as the strong support for the Bank Nifty. If we talk about India VIX, so we have seen consistent decline from last 4 to 5 days with the formation of lower tops and lower bottom. Now it is trading below all its key moving averages. So it is again showing positive sentiment for our market. So overall picture is looking good. Even broader market are playing fairly well. So we are expecting upside move in Nifty Financial, Nifty Private Bank, and Nifty PSU.
All right. Hi, Lakshmikant. Good afternoon. This is Ankita also joining in. Talk to us about the broader markets because they continue to outperform. In fact, the mid-cap was buzzing in trade today. Tell us, despite seeing significant run-up, do you see more steam left in the small and the mid-cap space? And how should one look at it?
Good afternoon, Ankita. So even broader space are looking quite well, as it has been trading with the sequence of higher tops and higher bottom. And in today's sessions also we have seen a gap up opening in Nifty mid cap as well as in Nifty small cap. So overall structure overall sentiment is trading on the upper side. So now from here on, Nifty mid cap could extend this gain toward the levels of 61,300 to 61,500 zone. And as long as it hold up the levels of 59,200 on the downside, we could expect upside move in Nifty mid cap. Now if we talk about Nifty small cap, so again we have not seen any reversal kind of formation from last 4 to 5 sessions. It has also trending higher with the formation of higher tops and higher bottom. Now support has also moved higher toward the levels of 18,400. Until it holds this support, we could see further upside move in Nifty small cap toward the levels of 19,200.
Okay. Okay, thank you for that, Mr. Shukla. Now, also tell us about where you're placing your bets. Which are the stocks where which are your top picks, and where you see momentum going forward?
So I would like to recommend 2 stocks from my side. First one is Tata Power. From the morning sessions, we have seen that power sectors started buzzing, and selected stocks started moving higher on the upside. So from there, we have picked Tata Power. So from last so many days, this stock is trending lower below the 200 DMA. But now in today's sessions, it has reclaimed its 200 DMA with the formation of bullish belt hold candlestick pattern, and it has formed strong base near the levels of 389 to 385 zone. So overall sentiment is on the bullish side in Tata Power. So that's why we have picked this stock. Even if we look at the RSI, so we have found that bullish crossover on the daily chart. So from here on, we expect upside move in Tata Power toward the levels of 430, and one can keep the stop loss of 389 till it hold this support. We could expect our target to reach within a few in the upcoming sessions. Second stock which we are looking, that is VDL. So this stock has given a falling trend line breakout on the daily chart with the formation of higher tops and higher bottom, forming a strong base near above its key moving averages, and it has also reclaimed its 200 DMA in today's sessions. So we expect positive upside move in VDL, and we expect upside momentum toward the levels of 480, while on the downside 440 would be the firm support for this stock. Until it holds this support, we anticipate our target in the upcoming sessions.
Thank you so much, Lakshmikant, for joining us and giving us your picks. We will let you go on that note. But moving on to the word coming in from the wise, Mihir Vora, CIO of Trust Mutual Fund, shares his top sectoral picks from across the sectors. Let's go across and listen into his rationale behind the picks.
things like, demographics, digitization, democracy, which are part of our, structural story. Then you have things like digitization, which is technological disruption, in which India has actually leapfrogged into a lot of technology. And then you have, things like physical infrastructure creation, which is going to be the story for the next few years. Every dip is a time to buy, frankly, because as they say, it's about patience and conviction. Your patience will be tested, but your conviction will be rewarded, right? So it's in times like these that you really, go and stick it out, and probably even if you have the, courage and the capacity, add more, so to say. Otherwise, we continue to be neutral to underweight on IT and positive on financials, especially the non-lenders. But after the RBI's action, probably even the lenders are looking as attractive now. Even without Trump and the tariff actions, we were always of the view that the domestic economy will grow faster. Domestic segments will grow faster than globally linked segments. So that theme, I would agree, we will continue. So financials is mostly a domestic theme, and that's the largest piece of the action. But ex-financials also, things like industrial, automotive, components, construction, then utilities, but not the the regulated utilities, but private sector utilities. Those kind of names, I think, will continue to grow faster.
Break now. The top sectoral picks of Mihir Vora in the current market setup. But with that, it's time to take a very short breather on this edition of Your Trades. We'll be right back with more news and updates on the other side, so stay tuned.
पैसा लगाना है तो
Back you tune in to Your Trades. Well, banks and NBFCs were in focus today on the back of that RBI's announcement for new framework for gold and silver loan and revision in the qualifying asset criteria for NBFCs and MFIs. My colleague Varun is joining in with the details of the story. Over to you, Varun.
Well, so banks and NBFCs, especially the gold financing companies, the microfinance companies and mid-sized banks were buzzing in trade today. Now, there are three reasons because of which the stocks were up today. One is the RBI rate cut. Other is RBI actually revising qualifying asset criteria for NBFC microfinance, and also RBI notifying the directions for lending against gold and silver collateral. Now, RBI has cut the rate by around 50 basis point and the CRR by 100 basis point. Street was expecting a good rate cut by RBI, and actually Investec has come out with a note which says that for a 100 basis point rate cut, the overall NIMs for banks and NBFCs would have been impacted by around 25 to 30 basis point. But the CRR cut is a big surprise, and that would actually aid the overall NIMs of banks and NBFCs by around 10 basis point. Other than this, the mid-sized banks are actually going to get a big benefit of RBI significant easing the overall liquidity. So that's the reason you're seeing a big jump, especially in mid-sized bank. Now, for the microfinance, RBI actually revised the overall qualifying asset criteria for NBFC microfinance companies from 75% to now 60%. Now, there are brokerage houses who are saying that this would help the overall microfinance sector to diversify and expand in assets and improve the overall financial position of microfinance companies, and also this would impact the overall fund availability and the overall balance sheet of microfinance companies. For gold financing, RBI has actually, if you look, they have notified the direction for lending against gold, and brokerage houses, especially Motilal Oswal, says that this would, the overall guidelines are better than what was in the draft in the month of April, and this will actually be positive for banks, also for NBFCs, but yes, this will actually increase the overall competition between banks and NBFCs as well, but yes, it is an overall positive. So these are the three reasons because of which you have seen banks, NBFCs, especially the microfinance companies, the gold financing companies and mid-sized banks buzzing in trade today.
All right, thank you, Varun, for getting us all those details. Now, speaking of banks and NBFCs, Shweta Daptarda, the Vice President and Lead Analyst of Diversified Financials at Elara Capital, shared with us a list of NBFCs that she likes amid this RBI's rate cut scenario. Let's go across and listen in.
Repo rate cuts on a massive scale bodes well for consumer financiers, gold financiers, basically small tenure, ticket size loans, even housing financiers for that matter. And of course, depending upon what the liability or the asset mix is. But having said that, this looks positive more for Bajaj Finance. We like even now definitely Muthoot Finance after the gold lending easing of norms. We also like SBI cards, at least least for the interim periods, although they will definitely face challenges in terms of asset quality. And we also have our bets on affordable housing finance space. So I think, yeah, for at least for next 9 months, NBFCs, given the kind of liquidity boost in the system, definitely stands positive.
And Saraf Syed, who's the CEO of Muthoot FinCorp, shared how RBI's new NBFC MFI norms will aid the company. He believes that the new norms will aid the company to give one-stop solution to all the customers. Listen in.
To build 60% microfinance asset and 40% could be diversified asset. So it really helps us in, first of all, diversifying our books, which will mean that the risk on the balance sheet would reduce, but at the same time, it will also allow us to serve our customer in a better way. In our recently concluding earnings call, we have already outlined our efforts to diversify our portfolio and provide services to our customers, which they are availing from multiple financiers. So we have seen that almost 37% of our borrowers have trade lines with other lenders in form of gold loans, in form of two-wheeler loans, in form of housing finance as well. With the easing of norms, which RBI has announced, we'll be able to provide one-stop solution for our customers, and they would not have to kind of navigate multiple lenders and multiple EMIs. So it will become a lot more efficient from a borrower perspective, and also it will allow an earning line for a microfinance institution, also a well-balanced portfolio mix, which will augur well for a long-term growth of an organization.
All right, from NBFCs and revised gold loan norms, let's shift focus to the stocks that were in focus today. Rabinder is joining us with the list of all the stocks that were buzzing in trade today. Rabinder, over to you.
Well, as MCX is in focus, our company has received approval from SEBI to launch electricity derivatives. So, back of this, MCX is in focus. Moving to next, Kalpataru Project International is in focus, where Kalpataru Project and its subsidiary has received an order of rupees 3,789 crore in BNFN and TND segment. So, back of this, Kalpataru Project is in focus. Moving to next, Railtel Corporation of India is in focus. The company has received 2 work orders. First is from the Department of Education Samarkand Shiksha for supply of amounting rupees 16 crore, and the second one is from the State Project Director Bihar Education Project Council for rupees 243 crore. Moving to next, Subrosis is in focus, where Tata Motors has rolled out its new series of heavy truck fitted with AC driver cabin. So back of this, Subrosis is in focus. And lastly, on back of brokerage note, Syngene International is in focus, where Kotak Security has come out with a note on Syngene International, and they have maintained their buy rating with target price of rupees 825. Kotak expect 18% EBITDA and 20% EPS CAGR over FY25 to 28. So back of this, Syngene International is in focus.
All right, moving on to an exclusive conversation with PNB's MD and CEO Ashok Chandra, who shares the impact of RBI's decision to cut CRR by 100 basis. Also shares Punjab National Bank's vision in terms of NIMs going forward. Listen in.
100 basis point rate cut has happened in the last 5 months. And the CRR cut definitely, it's a very, very calibrated move by RBI, and we all appreciate the move of RBI. Definitely we will take it forward, and the guidance which is very clear now, growth has to happen in the system, and PNB being one of the largest banks in the country, definitely we are going to play very, very important role in the credit augmentation and credit growth. So I must appreciate the move by RBI, that at the one point they have reduced the repo rate by 50 basis point, and at the same time they have given the cushion for the bank to earn income out of the money which will be freed out of this CRR cut now.
All right, then that's the word coming in from the PNB management about RBI rate cuts. But let's also talk about rising silver prices now. So Arun Misra, who's the CEO and whole-time director at Hindustan Zinc, has predicted that the prices will keep on increasing. But what are the company's plans to ramp up silver production? Let's listen in.
I have always been talking about silver prices increasing for last about 2 or 3 quarters. Remember last media call after the board meeting, I did say that yes, silver prices will cross $33 per troy ounce, and it has come true. It's close to 36 now, and it will keep on increasing. My predictions are by 2027 January we should see a number of $41, $42 a troy ounce. That is most likely to happen, not because of anything else, simply because of the supply-demand gap, not for the price, but more for India's demand for silver on the industry side. So we are expanding our metal production to about 2 million ton, and once we do that 2 million ton metal production, our silver production will go up till about 1,500 tons a year. So I think, yes, we will be doubling the silver production as well, and that will take another 4 to 5 years.
Moving on then, on the cautious commentary coming in for Tata Motors as the management flagged muted demand growth and seasonally high stock. Passenger vehicle tilt will remain towards SUVs, but they are optimistic of continued strength in the portfolio. My colleague Shrishti is joining in with the highlights.
Well, yes, Tata Motors has come out with their Investor Day presentation, and here are some of the key takeaways. Let's start with the passenger vehicle segment, where in the near term they expect that the overall demand scenario can be seen to be muted. In the system, there are seasonally high level of stocks, but in terms of the contribution from SUVs, they see that increasing, and Sierra launch will happen in the second half of FY26 is what the management is highlighting. But going ahead, they are targeting a double-digit EBITDA when it comes to their passenger vehicle segment. Other than that, when it comes to the EV segment, they are actually focusing on a 20% penetration by FY27 in their overall portfolio and take it to 30% by FY30, and positive EBITDA will continue and improve during FY26, but the medium term they see that the free cash flow can actually be in negative, but along with that the business is well funded for the next 3 years. Company has also come out with a long-term targets for the passenger vehicle segment. Herein they are emphasizing that going ahead they will strengthen their portfolio with 7 new nameplates and 23 product refreshers to be added by FY30. They are targeting 10% EBITDA for consolidated PV and EV business and positive free cash flow. And along with that, the company has also come out with their CV targets going ahead. They are aspiring to achieve a 40% market share by 2027, capex to be in the range of 2 to 4% of revenue, free cash flow 7 to 9%, and they are aiming to sustain higher ROS as well as reduce the volatility as well. So here are some of the key takeaways from Tata Motors Investor Day presentation. Back to you.
All right, thank you, Srishti, for getting us all those highlights from Tata Motors. But with that, we're completely timed out in this edition of Your Trades. It's a goodbye from me and Ankita. Thank you so much for tuning in. But stay tuned to ET Now as more news and updates are coming up on the other side.